Monday. We did in fact gap up and we're moving higher. We're establishing a position here below the 7 o'clock open inside this 1 minute fair value gap after we took external buy side, purged liquidity, and expanded higher. This is our 4-hour draw. So far we're getting a nice reaction off this fair value gap. This divvy took out this liquidity and brought the market back down to this discount gap.
Order filled.
This is our short-term external buy side. Notice how we're generating these relative equal highs, indicating further buy side potential. We have these two 1 minute fair value gaps being created here. We don't need to drop back down into this one. We can just trade into this, move higher, take the high, and keep moving. We don't need to come back into this, but I'd like to throw one P shooter on. The high here is in 92.50, so there's buy stops at 92.75. Drop down in the consequent encroachment in this gap. I'm also paying attention to this up close candle here, which would act as a breaker, because we purged the sell side, we purged this buy side, and we've closed back above it. So really looking for speed for premium here. That's what I'd like to see. This pleases me. This terminus is just for the runners that I'll be holding. If you rebalance this range, I want to close above it. I don't like how it got stuffed, but doesn't mean the trade's invalid yet, because we closed at consequent encroachment here after dropping down into this gap. We can even come down and get my fill here or fill in the rest of this gap before moving higher, but preferably I'd like to see it close above to pressure the shorts to squeeze. The 7 o'clock open is the open of this candle, so we're still below the 7 o'clock hourly open. So we're looking for prices to return higher, above 19,089.75. We did get a close above the zone. We have the option of trailing our stop. I don't think we're going to get that fill. And if it comes down into it, I'll add one. But now we're anticipating to come up to flip this hourly candle green. I don't like how it's stuffing this candle's low. After purging these buy stops, these relative equal highs. I want to see follow through because we took out the internal buy side of this range. I want to see it delivered to the external liquidity and then get some sort of follow through. I'll have most of my position off on a symmetrical price move. We're going to be patient. This pleases me. Came up to the open of the 7 o'clock hour, kind of nudging off of it. We're up 75 ticks right now. My stop isn't safe at break even, which is the problem. So I gotta keep my stop there. We're now poking above the 7 o'clock open, 7:42. I'd like to see some sort of expansion across and see it treated as some equilibrium price. I'm not going to add here, but I'm going to annotate it as a reason to move higher and a reason to hold my position. There's 1 bullish PD array, 2 bullish PD arrays, and 3 bullish PD arrays. So, I mean, if these 3 are stuffed, the likelihood that we're stopped out increases by a lot because this gap never really filled, and there's this unfilled gap here. So we can trail our stop to the low of this candle once we get this displacement. Or if we get displacement in the close above here, this is even a reason to trail the stop all the way up here. If we can get a close above 19,890. Here we closed at 19,890. So if we close above this candle's close, like we just did, now this is a breaker. Now I'm highly confident in the delivery of this first standard deviation and straight up expansion to the 50%. So I'll have most of my position off and I'll have some runners. I was able to get one off there. I want more follow through than this. 30 seconds still left in this candle. I'll let it reach. Now that we're on the other side of the 7 o'clock opening, we're doing some sort of price discovery. So now my position of 5 is on there. Now that we've taken out the external liquidity, we're allowed to retrace into some internal liquidity. Whether it's this gap or whether we find support on the 7 o'clock open and then continue our price discovery higher. We're also paying attention to this breaker. I'm going to go by the close here. Our hourly candle is flipped green, a 15-minute close above this down close candle. And we have this trend line liquidity from the wicks here, which act as a magnet for price. close another one off. Can we get a delivery to the 50% projection of this range, this retracement? So we had a position of 7 prior to the taking of external liquidity. We have almost a little, we have a little under half off the position now, and it's still running, which is ideal. Looking for prices to keep printing higher. Once we get to that 50%, I might be comfortable trailing my stop up to somewhere in profit. That makes sense. Right down the consequent encroachment of that gap. Right back to the 7 o'clock open. It's now 7:50 macro. So whatever that higher time frame draw on liquidity is, if it hasn't been hit yet, and our eyes are directed to 19,976.75, has not been reached yet. We're in premium. We're expanding on the 15-minute chart. The thing that concerns me is this little bearish gap in here. So this is our 15-minute candle open, right here. We dropped into this imbalance. This is around equilibrium, and this close indicates that there's a generation of buy stops from this gap here, and particularly because this gap is moving against order flow, anyone trying to short a market rising up out of greed for some sort of drop down like this is likely to get punished. The fact of the matter is the NASDAQ is up quite a bit, and has been showing this 15-minute expansion. This is accumulation. We're expanding here, looking for the arrival of 900. This is beautiful. That patience worked out. Instances like this, I get a little bit anxious, and I have to remind myself to stick to the plan, because it's structures like this where they're created as I'm tape reading that indicate to me that retracement is possible, but it means I'm going to have to sit through some measure of drawdown on the trade from max profit. We close above this gap here, but my concern is this up close candle now, because we took this 1 minute swing high and displaced lower. But we'll see how this equilibrium is treated, because we can see these as relative equal highs, and we gapped up on the next candle. Now coming back down to the low end of this orange gap. The close comforts me, but I'm watching the price action and it's not doing particularly what I'd like to see. Remember, this is the 7 o'clock open. The 7 o'clock open happens in 3.5, or the 8 o'clock open happens in 3.5 minutes. The close of that candle is concerning, but the formation of that candle isn't necessarily concerning. We took out the internal liquidity on this 1 minute swing low. We have these 2 highs here. We don't have any sort of medium or high impact news drivers today, so the fact that we are in 4-hour discount will help. And considering we took out this weekly swing low, that strengthens the idea of our trade. because we are buying such 4-hour discount after the bullish news of Biden's dropout hit the market on the weekend when they were closed. Keep the 5-minute time frame. We have this fair value gap here, which is why I said that trailing my stop isn't particularly safe. I could trail it to the low here, or the low of this up-close candle. The low of this up-close candle comes in at 19,870.25, which is a whole candle above my average. I mentioned this candlestick formation. Its close had concerned me, but its formation didn't, because we took out this swing low and generated this buy side here in front of this high. And what do we see? We see the market take this external buy side from this range, and in fact close above it. So now we're looking at this wick. This is 8 o'clock open now.
Order filled.
Beautiful. There's another fill. Now can we get to the 50%? I want to see it just pop up to that 50% projection off of the retracement.
Order filled.
There it is. Probably random. Yeah, so this is an instance where I'll go to the 5-minute, and the low of this is 70.35, so I'll just set my stop at break even, and I'll let the rest of this trade rock. We'll see if we can't get this for a standard deviation. Swap back over to the 1-hour chart, lower right hand cup quadrant, and on the bottom wick of this hourly candle, and I'm liking how this is shaping up. This trade is essentially done. I just have my 2 runners with a stop at break even. Gotta consider we are in price discovery, so it's important, especially when markets are bullish, not to try and call the top. My concern is this Asia sell side here and an unfilled gap, but if this news is bullish enough, we don't have to come down for this yet. It almost makes me wonder if we can come up and hit this first standard deviation based off of this breaker close, and this drop into this 1-minute fair value gaps close. If we can get a symmetrical price move here within the macro by 8:10, that'd be textbook time alignment. In sync with time and in sync with price. We're allowed to retrace since we came up to this 50% projection. We came up to the 75% projection, so it'd be interesting to see some sort of retrace back down into this little gap here. See if it wants to move higher off of this, with the dilemma being this gap is above the 8 o'clock open, so technically it's a premium of the current hourly candle, but if we're in some sort of price discovery and shorts are squeezing, there's a reason to expect this level to send it back up to the first standard deviation, whether it drops into it before doing so or not. As a general rule, these 50% projections, when you're in sync with order flow, and you're looking at a breaker, these are usually delivered pretty quick. Notice how we came down into this breaker fair value gap model right here, which I chose not to add in because I had my full position on. We dropped into this, immediately disrespected this bearish gap in equilibrium drop, came down, took the internal liquidity back into the breaker, expanded higher. Look how quick we got to this 50% after tagging this fair value gap. There's 810. Generating buy stops right towards my limit sell order. There's 1 bullish PD array, some bullish PD arrays, 3 bullish PD arrays. I could trail my stop to the low here. The problem with that is I risk some sort of internal raid. How many ticks is that? I could confirm 50 bucks avoiding some sort of stop out there. I could confirm 28 bucks avoiding some sort of stop out here. I think I'll be happy with this, because it's a stop below the breaker, it's a stop below this fair value gap, it's a stop below this IFVG, and it's a stop below this. It's a stop at a reasonable level below the 8 o'clock hour. And I confirm 50 ticks on the trade. And the remainder. We got in on this candle. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 26, 29, 32, 35, 38, 41. So we've been in this trade for over 40 minutes now, which is a great hold time. Great improvement of hold time. We are falling short of this first standard deviation, but that isn't going to scare me at all, because we only have 2 contracts left on. Yeah, we didn't get my sell before 8:10, but doesn't mean we can't get it delivered within this 8 o'clock hour before 8:30. It's below this candle here that came into this imbalance. This imbalance here I want to see reclaimed on the hourly. So I'll mark it in orange. But it's an hourly bearish gap, and we just printed this here, which is this is a logical short actually, because it's above the 8 o'clock open, it's above the 8 o'clock candle open, it's above the 7:30 New York open. So this would be a reason to retrace. We purged this swing high, we displaced this swing low. I'm just curious to see how this blue gap acts, and I'm interested to see if this gap becomes something like this. Dropping into this busy here at the 50% projection. And notice this gap was traded into before this one, which is interesting, and we're engaging these sell stops here. So albeit this is red for now, the remainder of these runners are anticipating some sort of eventual disrespect to this and a visit up to the top of this hourly range. But since this is the imbalance that took us to this weekly sell side, it's very possible that this could be reused for shorts, and they could gain some sort of momentum off of it to take out the low generated at 19,775. This candle here, dropping back down to the 8 o'clock open, pulling off of it. How do we close? Because we displaced this high, right? Right there. We displaced this high. Really, we're just dropping back into this. We did close below this gap, so it's a reason to continue downside. Drop below the 8 o'clock candle open. If you can get a close back above that busy highlighted with the 2 blue lines, that's ideal. Because we are in 1 hour expansion. Approaching the gap we've already entered. We generated buy stops above the new month opening gap. So we came down to the 8 o'clock open, and we reclaimed that busy generated above. And we're revisiting this bearish or value gap here, looking for some sort of disrespect of it so we can flip it blue. But if it's respected, that's fine. It'll just begin to retrace. They may even want to take the low here, generated at the 8 o'clock open, during some sort of manipulation leg to take out stops. So early buyers may be trying to establish a position, say in a bull flag, as it consolidates below this hourly level. Eager longs will set their stops here, and they could be manipulated against. Or this candle here represents a breakdown of this, and shorts getting trapped. So how does this down close candle behave? Do you see support off this down close candle? It appears as though longs are attempting to really apply pressure on those shorts, even if we're getting some respect at this level here. And the way to interpret this partial is just taking it off in the buy stops here of the shorts that are trying to accumulate here. It's very possible that we could even flip bearish to come down to the previous hourly candle's low. There's internal liquidity. We're in a very privileged position here. displacing lower, poking below the 8 o'clock open here. Drop below the 8 o'clock hourly open. I'm expecting some sort of expansion and take out these buy stops ahead of the 8:30 open. And then if we want to retrace for the 9:30 open into some sort of discount, that would begin to make sense. But this also can be seen as some sort of breaker, because we took out this swing high here. Paying attention to the reaction to this up close candle here, because it took these buy stops and then got this place lower. But the fact that we got this close above here makes me very happy. It means I can take another 50% of the remaining position off over 150 ticks in profit, which is a 3-to-1 trade here. Now we have a breaker fair value gap model. So we might actually be able to move our stop up to this low. I'm actually going to move it up 100 ticks. So I've officially confirmed 100 ticks on the entire position. We got this fill here. We got our symmetrical price move. Totally random. And this is a point in time where 55 minutes into this recording, I am comfortable walking away from the charts and letting whatever happens, happens. If I'm trailed out on this position, it doesn't want to expand and disrespect this hourly gap like I expect it to with these generated relative equal highs here, so be it. I don't care. And actually, I'm going to do something more. And I'm moving my stop 100 ticks in profit. If it does reach down all the way through here, then at least I'm selling above the 8 o'clock open with this hourly candle. And framed off of this gap here, which should want to take prices to constant encroachment and the high here. Actually, one of the things I might do is take it off as this daily candle draws up into the daily fair value gap. And I'm not going to do that though. I'm just going to stick with my 4-hour objective. So really, I'm taking this last piece here off at the 80 handle. An hour into the recording, I'm going to stop it here, and if I stop out, or when I get my final exit here on the 4-hour swing high, which is the draw. I will record that as well after price does whatever it's going to do in between. Here's what I'm going to elect to do. I'm watching this on the 15-second chart. This is a 1-minute fair value gap that was generated, and currently is being disrespected. This hourly candle is mildly rejecting this imbalance for the time being, but there's only 3 minutes left. So if we can create some sort of 15-second buy signal here, with 5 seconds left in this candle, we'll add one and we'll trail our stop. But this is our 100-tick stop. We're just watching how this low end of this range is built. Do we purge this liquidity here and create some sort of 15-second, sorry, create some 15-second fair value gap? We're going to create that 15-second fair value gap now. I might have missed my add opportunity on this candle's close, which is a shame, but regardless, I can move my stop up. The low of this candle is 907.50. My stop is at 907.25, and the low, oh, it's going without me. It's going without me, so be it. I should have just added within the 1-minute gap, but that's alright. So we'll go to the 1-minute chart. Just kidding. We'll go to the 15-second chart. We disrespected all this. We purged this internal buy side and came up to the equilibrium of this. So if we drop down, we're going to see if we can't drop down into that one more time, purge that previous 15-second candle's low. I may not get it. This add and consequent encroachment. I'm not scared of this. And I'm also willing to sacrifice the terminus for a potential stop out after the main trade has already been executed. We'll see if I can't get this fill based off of a 15-second. It's allowed to expand without me. I'm paying attention to time. Between 8:50 and 9:10, there's a window of opportunity to buy a black hourly candle, anticipating this high to be taken in the delivery of the second standard deviation. This is some sort of inversion fair value gap, and there's a fair value gap here, but I am sticking to the 4-hour draw. So our limit buy is the collection of sell stops. The sell stops on the external range of the retracement. So it's some sort of turtle soup. This current 15-second candle, booked above the previous, is trying to displace it. It's trying to create some sort of order block here. We'll see if it trades into this and then creates a fair value gap. We get a close above this 917.25 level, and we'll seek expansion into these imbalances. We didn't get a close above it, but we got the volume imbalance, which disrespected it, which indicates that that's the right idea. Something tells me I missed this buy order, which would have been obvious if I had set a limit order for this fair value gap instead of trying to buy the market. We're expanding up into this now. So I'm probably not going to get that fill. Coming up into this 1-minute civvy here, I'd like to see this disrespected, big time. And I'd like to see squeeze mode. Pay attention to this 15-minute chart. We had 2 down close candles, and we just broke above the previous 15-minute candle's high, with a high likelihood of expanding through. Five seconds left in this candle.
Order filled.
With a little stop below this candle here, the low of this down close candle being 19,911.25. So our stop is directly there. We'll take another one off at the second standard deviation. Or perhaps we do the same thing we did with the previous setup. Take it off at 39.75. I'm perfectly content stopping out as well. Again, well, one of the previous trade narrations, I talked about how I don't want to marry the objective, but I just want to follow the price. Now, the thing I notice is that if we have equilibrium of this retracement and we're not really expanding through discount and we're not really accumulating in premium, that's an indication that this external is a target. Drop down into this down close candle as well. Volume imbalance higher, which we like to see. Don't worry guys, it's all random. It's all random. One of the things I may do is hold that runner for the first standard deviation, considering how the last setup treated us. We did close above this imbalance here. I don't want to see it drop back below equilibrium of this retracement. And I want to see a displacement of this high. Yes, we're getting that displacement. I'm going to set my order for the symmetrical price move. In fact, I'm going to set it for 19,950, which is an institutional level, right here. See how quickly we got to that 0.5. This is what I was talking about earlier. This is the same thing. Same thing. Except it happened faster. One of the things I think is safe to do is to try my stop to this candle's low, which composes, we're basically created the body of the fair value gap I added in on the 1 minute chart. The low here is 19,915.50. If I trail it to 19,915.25, that should be considered safe. Because we look at this range here, which took out this high. This should be a breaker. Really looking for that institutional level to be delivered to. And we're also looking for this gap to be respected, even though there's this gap here. We're expecting this, I'm going to change it to blue, but we're expecting this blue gap to be respected as it's a fair value gap that was generated on the creation of this breaker. And it doesn't even need to be traded into. Although I prefer to see it trade into this for somewhere around the 25% projection. See, we dropped into it here. It can drop as far as this, but regardless, I don't want to see this candle filled in. And particularly, we're looking at what price ought to do upon the injection of the most volatility of the day, 9:30. Watch constant encroachment here. Trades into it. Took the previous 1 hour candle's high. And the argument is we're trying to displace it on our way to our 4 hour objective. Yeah, any return to equilibrium here is a likely stop out, but I don't see any reasons for prices to stop here until we return back to the high of this. Remember, we have a high, an hourly high, of 19,976.75, which is also a potential objective for this candle. I'm pleased to see this reaction. Notice how almost to the tick we come down into this breaker. Here, the high is 19,931 flat. Below here is 19,931 flat. So we're looking to 19,950 institutional level, looking for the disrespect of the hourly gap that was respected prior to the weekly swing low inside of a weekly busy. Beautiful 15-minute candle formation so far. Set to closing of the high, which is precisely what I like to see regarding these potential 1 hour inversion gaps. Precisely what I like to see. And in fact, close back above the 50% projection, indicating that we're likely to go to the 100% projection of this retracement. In similar fashion to what we did here. And we generated another gap to support that thesis. New 15-minute candle open. We have 14 minutes until the 9:30 open. Eyeballing this new month opening gap. This could be the current draw on prices. It could be the case that this is an early exit, targeting new month opening gap below. Especially on low volume. Especially since we took out a weekly swing low. And especially since Biden announced he's dropped out and the races between Kennedy and Trump. I'm really not concerned until we reach 19,947.75. And if we were to reject that hard, that's where I'd start considering the possibility of being wrong. But right now, everything's pointing to me being on side, and there's no reason for my emotions and my greed and my fear to make any further decisions besides just waiting and being patient. Now, on any sort of failure of this gap, because we took this liquidity, there is a generated sell side here, back in the breaker, and there's no reason we can't revisit the breaker and move higher, because the breaker happens to be at consequent encroachment of this hourly gap. You see that? See that? See how the middle of this up close candle almost perfectly aligns with the middle of this hourly gap? I'm sure that's just random. I'm sure it's buying and selling pressure, right? The thing is, I could stop out on this and be perfectly content with the position I've managed this pre-market. I'm content, having captured my small slice of the pie. We're about to take this swing high here, created at 19,943.75, or at least we're generating a double top here on NASDAQ, at the very least, indicating that, yeah, up here's a magnet. There's a little under 7 minutes left in this 15-minute candle. And again, we are looking to displace the previous 15-minute candle high. We're coming up to the high of this 1 hour gap. I'm very pleased with price action this morning. Very pleased.
Order filled.
I'm sure it's probably random. Oh, yep. There's just something to be said about knowing that you are right where you are supposed to be at exactly the right time you're supposed to be there. And understanding the likelihoods of what's about to happen. There's something beautiful about painting these candlestick charts. It's two-dimensional chess. That's what it is. It's two-dimensional chess. So now we have this gap, which in all likelihood is going to be respected. I won't add it there because it's premium at the high of this 1 hour imbalance. I could throw one on there with a stop below the low and have one trend be this 4 hour relative equal high, and then the last one off up here, or even taking the final one off at 2004.75 or 2005 or 20,005. Pardon me. One thing I'm going to do is I'm going to trail my stop to break even. even below this breaker. Although this feels unsafe because of this gap that's here. We'll cover costs. We close below that gap. So this is an inversion. But now, coming back into this 1 minute gap that sent it to the high of, or sent it to the hourly imbalance high. We can take out this internal range liquidity here, and we can take out this here. But really, I don't want to see it drop below this breaker. And I don't want this gap to fill. If we get a close back above this, I'll just mark this in blue. Trade it up into this up close candle here. Immediate rejection, but we don't even have an upper wick on this candle yet. It's 928. So I'll either be liquidated on the 930 open, or the 930 open will be used to expand to my terminus. We can also see this down close candle. This is the down close candle that rebalanced this gap. And we saw it closed above here. So we'll know in the next minute and 10 seconds. .45 seconds to open, 930 open. It is now 9:30. Take the internal liquidity. Drop back into the breaker. Drop back into this fair value gap. And we're stopped out. That is A-okay with me. This is a beautiful trade. No complaints. And you can see it was a smart idea to stop out at break even because I would have stopped out here. This is the 15-minute swing low. Right here. Unfilled gap. Unentered gap. Yeah, we walked prices pretty well. This is a wrap for a trading day. At the end of the day, we'll see if this 4-hour objective is met at all. We have this hourly imbalance here, which prices may want to come down into. This is what I generally expect prices to do after a rejection like that. It would be liquidating all the people like me who went long around the 7:30 open.